many more people will understand that the Fed, with a 24-fold increase in interest rates over little more than a year's time, has absolutely shocked the financial system around the world.
In the ever-evolving landscape of finance, few figures command as much attention and respect as Cathie Wood, the visionary founder and CEO of ARK Invest. With a keen eye for disruptive technologies and a track record of bold investment decisions, Wood has become a leading voice in the realm of innovation-driven investing. In a recent video, Wood shares her insights on Bitcoin, the emerging markets, and the future of finance. Join us as we delve into Wood's compelling analysis, unpacking the macroeconomic factors shaping the trajectory of this nascent asset class. Cathie Wood opens her discussion by emphasizing the significance of Bitcoin as a pioneering asset class, extolling the virtues of ARK Invest's research team and their long-standing advocacy for digital currencies. With roots tracing back to 2014 and the publication of their first white paper in 2015, ARK Invest has been at the forefront of championing Bitcoin's potential as a transformative financial instrument.
I think there's been a lot of communication about what Bitcoin actually is in this new asset class, leading the charge. I know that our research team, I know Yassine is there with you, has done an amazing job, not only in the last 6 months or year, but we've had research extending back to 2014. And our first white paper in 2015 when we took our first exposure. And so we've been singing the praises of Bitcoin for a long time as a new asset class. So that's a start. But I do think there are some macro factors. I know Mike mentioned this earlier. We're very focused on what's going on in the emerging markets right now. I think with time, many more people will understand that the Fed, with a 24-fold increase in interest rates over little more than a year's time, has absolutely shocked the financial system around the world. Now, many people are looking at very short-term lagging economic indicators here in the United States, primarily because the Fed is doing that. But if you look at other signals out there, there are signals that not all is well in the world. I know Mike mentioned the Naira, the Nigerian Naira, which has devalued by 2/3 since last June. Now, Nigeria is one of the wealthiest countries, oil-rich in Africa. And with a new administration that's become very business friendly, I think they thought they could let the currency float, and they found out, that it has been very painful from a purchasing power point of view and from a wealth point of view. We've seen the same in Egypt. That the Egyptian devaluation was 40% at the beginning of March. So I think that there's a bit of a risk-off reason for owning Bitcoin emanating from the emerging markets. We've seen in Argentina with the new administration there. I think the currency, they made official what the black market already knew, that the currency was worth half of what it was reportedly worth. So I think we're getting those warning signals. I also think, yesterday we got the Swiss bank cutting rates, which was a big surprise. The UK turning a little more dovish. The Fed now a little more dovish. Why? What are they seeing out there? And so many people think of Bitcoin as a risk-on asset, and it certainly has traded like that over time. But we have been looking at it as both risk on and risk off. And I can tell you when we first learned that in 2015, when we took our first position in Bitcoin via GBTC, Bitcoin was about $250. And many people were making fun of us at the time, thinking, oh, they're new. We had just started our funds in October of 14. Oh, they're new. They're just trying to gain attention. This is a marketing gimmick. And so we were really on the spot. First of all, we had done a lot of research. We didn't think, we thought there was real investment merit, but we were watching like a hawk its moves. And back then, Greece was threatening to leave the European Union. And every time there was a flare up, and a fear of another European sovereign debt crisis, Bitcoin inched up. And so we've been looking at it as both a risk on and a risk off asset for quite some time. And the regional bank crisis last year confirmed that point of view, that here Bitcoin more than doubled as regional banks were imploding. So I think many people are beginning to say, as they learn what this is, wow, could it be both a risk on and a risk off asset? We think so. Well, it's certainly going to be adding more liquidity. That's good for price discovery. I think it's legitimizing this new asset class. So that's a very good thing. I think bringing in a new class of investor is important. And, one of the reasons that we wanted to do a Bitcoin ETF, or a spot Bitcoin ETF, even after we decided that it would probably be very low fee given the way the competition was going to evolve, was, we're looking at Bitcoin as, the technology as well. It is, a financial superhighway, a public good. And so we think educating and offering access to as many people as possible in a less friction-filled way. I mean, many people just didn't want to deal with wallets and so forth, is going to, in hindsight, when history is written, I think is going to become a very important moment in time.
Wood shifts her focus to macroeconomic trends, highlighting the repercussions of the Federal Reserve's aggressive interest rate hikes on the global financial system. She underscores the challenges facing emerging markets, citing examples like Nigeria and Egypt, where currency devaluations have eroded purchasing power and investor confidence. Against this backdrop of economic uncertainty, Wood posits that Bitcoin may emerge as a refuge for investors seeking to hedge against geopolitical risks and currency volatility contrary to conventional wisdom. Wood contends that Bitcoin's appeal extends beyond being a mere risk-on asset, asserting its dual role as both a risk-on and risk-off instrument. Drawing on historical precedents like the Greek debt crisis and regional bank failures, she illustrates how Bitcoin has exhibited characteristics of a safe haven asset during periods of economic turmoil. This nuanced perspective challenges prevailing narratives surrounding Bitcoin's market behavior, offering investors a fresh lens through which to interpret its significance.
Well, asymmetric, there aren't many assets out there that I think can claim that they're both risk on and risk off. So for that reason, we think that the return profile is going to be certainly relative to anything else out there. Yassine and team have done the returns to Bitcoin. I think this is over the life of Bitcoin, or I forget exactly. He'll tell you the period of time that we put in our big ideas, 2024. And if you look at Bitcoin's compound annual rate of return, it's 44% over that time versus I think it's 4.5% for all other assets combined. So we think the superior returns are going to be there. This is the beginning. This is just the beginning of this new asset class. Yes, and the volatility is coming down. As we look at, are we going to have the same returns from peak to trough going forward? Perhaps not, but we've come a long way, and we still think we have miles to go. For the first time, the the supply growth of Bitcoin, as it drops from 1.9% per year to roughly 0.9% per year come April, it's hitting an important milestone. The supply of gold has been growing very long term, on average 1%. So now, I mean, it's just marginally, but it is below the supply growth of gold. So we're trying to use that to help people understand a lot of the reason that gold became such a successful asset class is because the supply growth was fairly controlled, especially relative to money growth out there in various regimes, including our own. And so I think I don't see any reason why the halving won't cause the same dynamic that it has in the previous cycles, especially as we're going out there with that message. It doesn't happen right away, April and boom, and it usually doesn't happen that way. So maybe they'll develop some impatience, but we think that it emphasizes one of the core features of Bitcoin and the reason it is a risk-off asset as well as a risk-on asset. I think that the Lightning Network demands too much collateral. And so, this is a very creative and a creative community, and they try and find workarounds, and those seem to be finding some success. But one of the things that, in terms of the Lightning Network, that's been fascinating. Actually, this was on one of our Bitcoin brainstorms. We do a Bitcoin brainstorm every month. I think we've done it for 7 months now. Yassine and the team with Bitcoin Park. I don't know if you know Rod Ruby from Bitcoin Park, but we do this once a month. And the second one we did was just mind-blowing to me. I was wearing my economics hat, the emerging markets. I understand about those as well. But there's a convergence between artificial intelligence and Bitcoin and the Bitcoin network that's taking place now. And it's taking place in the emerging markets. We had, for those of you who know the people involved in the Lightning Network, his name is Roast Beef. He's one of the developers, and he was telling us in Africa what he was witnessing was, a completely new division of labor. We've gotten used to gig economy, that concept here in the United States with Uber and Airbnb and other things. But you can turbocharge that into the micro gig economy and AI agents using the Bitcoin network through Lightning. So it's happening, but as so much is when it comes to Bitcoin, we're not seeing it as much here as in the emerging markets where, there's more of a need.
Wood reflects on ARK Invest's early foray into Bitcoin investing in 2015, recalling skepticism from critics who dismissed it as a fleeting fad or marketing gimmick. However, ARK Invest's conviction in the investment merit of Bitcoin was vindicated by its resilience amid market turbulence, particularly during events like the Greek debt crisis and regional bank collapses. This track record underscores the firm's steadfast commitment to identifying disruptive investment opportunities ahead of the curve. Looking ahead, Wood anticipates continued growth and maturation of the Bitcoin ecosystem, fueled by increasing liquidity and institutional adoption. She lauds the introduction of Bitcoin exchange-traded funds ETFs as a pivotal moment in democratizing access to this transformative asset class, thereby broadening its appeal to a wider investor base. Moreover, Wood underscores Bitcoin's asymmetric return profile, citing its impressive compound annual growth rate CAGR of 44% compared to traditional assets. Wood touches upon the upcoming Bitcoin halving event, wherein the cryptocurrency's supply growth rate will decrease from 19% to approximately 9% annually. She draws parallels to the supply dynamics of gold, positing that Bitcoin's diminishing supply growth could drive sustained price appreciation over the long term. Moreover, Wood highlights the convergence of artificial intelligence (AI) and Bitcoin in emerging markets, where innovative applications like the Lightning Network are catalyzing economic empowerment and financial inclusion. Please like and subscribe my channel.